Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's keep up with the euro currency. First, I would like to say that tomorrow probably we will prepare another report on the forex market, in particular on the Great British pound, because it's a lot of news from the United Kingdom that has relation to the currency, and we just can't ignore them. They bring new background for our fundamental view, for our longer-term analysis, and we just have to take a look at it. So that's why tomorrow we will replace our gold report by the Great British Pound analysis. On the gold, mostly the technical situation stands the same as we have talked about on Friday. Despite the recent collapse that we saw on a daily chart on the gold, that actually increases chances on the failure of our bullish setup. It has not been erased totally. So we just need to wait for some time and see whether we will get some reversal maybe on the market, because market still keeps weekly lows valid when the grabber has been formed, and we talked about in the last week on the gold market. And until market keeps them valid, the bullish setup exists. So and we can't just ignore it. Although the overall background is not really very friendly for taking long position right now, we just need to wait and see a bit more. So if we'll get the real signs of a reversal, we'll return back to this analysis on this stop. If not, well, we will consider a different view, and probably market in this case will follow to the hand and shoulders patterns that we have on the daily chart. But currently, some chance exists that these hand shoulders could fail. That's shortly what we have on the gold, and mostly we talked about in the last week as well. So from that standpoint, everything stands the same, and we could replace the gold analysis with the Great British Pound with no really harm to the former. Daily updates should be sufficient to keep an eye on the gold. So now let's go to the euro. First of all, in the euro analysis, fundamental background that we've got on this week mostly confirms our long-term view. So now even market participants in the big banks, and the Commerzbank in particular, starts to talk about the same thing that we're talking about within the last two months probably. This is disproportion between the European Union and United States economy. Absolutely different conditions that, in the divergence between these economies, it seems will become stronger. That in turn should press on the euro USD rate and probably will support the downward trend. So that's what about the longer term view. But in the shorter term view, in the current week, in the coming week, we are mostly very fascinating with the current level. It's around 108.50, 108.70 that we talked about on Friday as well, because market currently stands at a really crucial moment. Why? Because actually this is not just some targets on the daily chart. If you'll take a look on the monthly chart, you will see that this is yearly pivot support 1, and also this is the middle of the range on the monthly chart. And this is very important, because if market will break this area, the road to one or two lows will be open, because market will come to another free space between the middle of the range right to the bottom of the range. From that standpoint, this is crucial area. Also, what we think is that this action, despite in what direction it will follow, either it will be sharp upward reversal or it will be downside collapse, this action probably will be triggered by some global event. So this will be either political news or some economical news, maybe some breakout in one or other direction in the United States, China, tariffs, war, maybe some political statements on domestic news in the United States and political sphere, something of that sort. But some external driving factor probably will trigger this. Because currently, guys, inner driving factors on the euro currency, they are clear. So the policy of the federal banks, central banks, is clear. The statistics is clear, as in the United States, as in European Union, and from that standpoint, euro is really gradually drifting lower. But market stands at the point where some strong action probably will happen. On the daily chart, as you can see, we have potentially bullish setup is forming because market has multiple targets here. It's OP of this A, B, C top pattern. First butterfly is 1.618 extension. Second butterfly is 127 extension. Both of them together create three drives. So the first drive, second drive, third drive. As you can see, extensions of the first and the second drives coincides in a tight range, which is perfect for this pattern. Monthly pivot support one here, another targets on the follow time frame chart. All of them stands in the 10850, 10880 area. So potentially this is bullish reversal pattern. And if free drive will work as it should, market should exceed 111 area because minimal target of the free drive is the top between the second and third drives. But the tricky moment stands with the free drive, and if it will fail, for example, if market will not show the reversal in this area, it will fail miserably. It means that the collapse will be very strong. On a weekly and monthly chart on the euro, you could see some tension in this downward action. It means that some bullish power exists in the market, but bears stands a bit stronger, and they're just pressing and pressing lower. So market is standing lower with the flat, gradual downward channel. So no acceleration stance. And here is the key moment is acceleration. Once the first signs of acceleration will follow, it will be like the snowball, and it will become stronger and stronger and faster. And market, once it will break this 10850 area, it could be really strong collapse if the free drive will fail. And we should be prepared. So it means that our trading plan suggests first watching for the bullish reversal patterns as soon as market will complete these targets. Right here is around 10870 area. Once these patterns will be formed and everything will be okay, in this case we could try to take the long position, because the potential is really attractive, more than 200 pips to the upside. That's first moment. But at the same time, we should be on guard. We should be keeping an eye on these bullish patterns to catch any possible signs of failure. For example, minor hand shorts forming here on the follow time frame chart. Market starts moving. We're taking position on the bottom of the right arm, as usually we do. But then suddenly market turns down, drop below the lows of the right arm. That's clear signal that something is wrong. We should be out and think about reversal of the position. So because collapse, if market will fail here, will be outstanding. So that's in 2 words that we will be watching for next week. That's our training plan. On the 4-hour time frame chart, it seems on the first glance that we already should consider bullish patterns. For example, here we could recognize kind of the hand shoulders is forming or something of that sort, but not yet, guys. Until market will not hit these major targets, we should not consider any bullish patterns. So this is crucial moment, because that is too strong support areas, too much target stands below the market, which just can't be ignored. The market has to reach them first. Only when it will happen, we will consider the bullish patterns. It means that if you're a scalp trader, you trade on the hourly chart, on the 15-minute chart, that could be the last bearish chance. So keep an eye on this possible retracement. Unfortunately, in this area, we don't have any patterns yet. Only maybe the divergence exists here, which suggests that maybe the deeper upward retracement could happen, something of that sort. So here was the divergence, market shows a bit deeper retracement. Here it could be the same thing. So market could form some kind of the A, B, C, D pattern, right in agreement with the confluence. That will be the chance to sell, because market has to hit the major targets on the daily chart. That's only for the scalp traders who would like to take the last bearish chance here, and with the drop for 100 pips probably, if indeed market will reach this area. But it's also possible the market will turn down right from here. Anyway, for us, we're not considering right now attempt to go short. We want to get the setup for taking the long position. Since we are trading on the daily, on the follow time frame chart, our updates mostly stands for these time frames. And we are not really care how market will reach this area, whether it will drop right here or it will show some minor pullback and then starts dropping. We would like to get the market at the 10870 and then we will keep an eye on the bullish reversal pattern. That's our major trading plan. This setup is for scalp traders. If you trade on intraday charts, you could think about it. But be aware of the taking long position. Currently, it's too risky, just because market has not reached yet the major targets below the market. So that's actually the trading plan that we will follow on the next week. Let's see what we will get on Monday.